Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Friday, June 2nd, 2023. Before I click on the charts, just want to encourage you to please click like, subscribe, share the content with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of analytical videos just like this: daily analysis in the triple Q and the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week that you don't see on YouTube. On Thursday, we put one out on NVIDIA, giving you big picture analysis, buy and sell levels, trend dynamics. I also put out, if you saw on YouTube, a free US dollar index analysis that maybe have helped you if you follow the US currency closely. So there's all that. But in terms of the wickedstocks.com, all those videos that I mentioned, every single day, the Q, the SPY, $47 a month. You have a 5-day free trial with that, so you could bail if you wanted to after 3, 4, 5 days with no charge to you. So check out wickedstocks.com. Anyway, on with the Apple report. Just a reminder, if I need to, that we settled 1, 2, 3, 4, 5 weeks ago above 170.68. That formation set off a significant long-term buy signal. Up to that point, we were anticipating the possibility of topping out in the low 170s and then falling off in a meaningful way, perhaps into later year, but wasn't to be. Having settled above that 170.68 level, that formation 5 weeks ago did indicate near term a retest of the 182.94 all-time high from January of 22, and longer term bullish continuation to the 219.35 long-term channel top that goes back, really its origin span back to the COVID low of 2020. This upper area, I'm going to say over the next full year or sooner, probably sooner, we covered a similar distance in about 6 months from the January low. So over the next 5 to 8 months, we could certainly make our way to 219.35 and climbing. 182.94 may be in reach today. We could double top at 182.94 through next week, perhaps into later June, and from there fall back into the low 170s again, which would present another significant long-term buy opportunity, bottom picking the low 170s as we move through the rest of the year until proven otherwise. This area able to contain selling longer term through the rest of the year. And yes, closing above 182.94 should yield 219.35 in about 3 to 5 months, where we could top out on an annual basis. So let's take a look at the day itself. I know most of you are tuning in for that. This 179.98 channel top that has performed quite well over the last few weeks and containing buying pressures, we settled just above it. On Thursday. It wouldn't take much to open right back below it, and then we could ease south a bit, and I mean just a bit, perhaps to 176.57. That is an intraday support level. If we break 176.57, 175.32 in reach where a daily low can be placed. I will say, though, that if we close below 179.98, we could fall back to the base of that same channel structure that is presently 171.09, and that correlates very well. That number should be relatively familiar to you, correlates well with the 170.68 long-term support. So that's another way of saying, actually, that if we happen to open back below, close below 179.98, we can ease back into the low 170s, that long-term support region, possibly by the end of next week. And yes, if we close today, even below 176.57. So I kind of grappled with how to weight these levels on an intraday basis for day traders. 175.32, good level to buy, especially if you're short from the upper 170s. But I will say that the downward pivot point, in my opinion, should really be 176.57. And so just know that if we do close today below 176.57, that itself should yield within 3 to 5 days that low 170s long-term support. I'll also say that merely closing below 179.98 today will keep the low 170s in reach by the end of next week. So that is kind of your 3 to 5 day play, perhaps, despite the fact that we're in the midst of this long-term buy signal. 179.98, if we open below it and it holds, we can certainly ease back next week into the low 170s, perhaps. But The likelier outcome is that we'll open higher on the day, maybe even gap above Thursday's 180.12 high. And if so, 182.94 in reach today. Once again, that is the long-term top, the all-time high from January of 22, where we may top out through next week. I also mentioned that 182.94, this channel top is kind of pulling away. So it is becoming a bit of a range, but honestly, yes, closing above 182.94, yet another reason to go long, more long, buy more calls. But if you're more of a near-term trader, if you really want to let that play out into next week, it would be a settlement, I think, above 185.66. That would be the accelerator as we move into later June. So there is a chance we push through 182.94, test 185.66, and then fall back to close at or below 182.94. Yes, closing above 182.94 if you're a big picture trader, secondary buy signal. But if you're really more into finessing kind of the 1 to 2, 2 to 3 week swing trades, pay attention to 185.66. It will have significance in terms of settlement above, indicates aggressive gains as we move into July trade. I think that pretty much rounds it out. I don't think there's really anything else to say. All the minor points have been carefully chosen. We can ease back to 176.57 today. If we open below 179.98, that could be it for the day. If we break 176.57, 175.32 likely, where we can place a daily low, but also know that just closing below 176.57 would also be the low of the high, which was placed on Thursday, should actually pivot the market south into later next week. The low 170s long-term support, then in reach over that time frame that would present a meaningful buy opportunity as we move into the third quarter. I think that pretty much does round it out for Friday's Apple report. I'll leave you with this image. This is the appropriate one right now because we are approaching 182.94, and we may actually see that today. Please click like, subscribe, share, and check out wickedstocks.com. Check out our subscription package. Sign up. You can bail after 5 days if you don't like it, but I suspect you will like it. It'll contribute to your overall view of the market and present some pretty good trades in the Q and the SPY and individual stock picks that we analyze for what I would call longer-term swing traders, 3 to 5 weeks out, to near-term investors, 3 to 5 months out. That is all I have for Friday's Apple report. I'll be back Sunday afternoon with Mondays, and you have a great weekend.